What is going on, 578ers? Welcome to this week's installment. My name is Peyton. I'm going to be showing you guys how you can start investing your money with as little as $100 as a beginner. If this sounds interesting to you, stay tuned. It's going to get good. Cue the intro. Let's go. Alright, so a couple of things that we need to understand is what the stock market exactly is, as well as why we should put our hard-earned money into it. So the first question is the stock market is made up of buyers and sellers of stocks. And stocks are essentially a part of a corporation that put their shares or stocks out there for people to buy and sell for them to raise money for their company. The reason why we should be investing in the stock market is because it allows for exponential opportunity for your money to grow upon itself. The wealthy people are doing it. They are just keep on getting more and more wealthy, and that is why you should be doing it as well. The numbers do not lie, folks. The earlier you start investing, the more time that it has to accumulate, the more money you will have when you take out your money. The next step is finding an account that suits your needs. So whether it be a brokerage account, a savings account, or a robo-investing account, it's all gonna depend on what kind of investor you are. So beforehand, you have to kind of go, think to yourself, do I want to be hands-on? Do I want to be researching all the time? Or do I want to be very hands-off with it? So to give you an example, the brokerage account is like a Robinhood or a Webull, and that is where you choose your own stocks, your own ETFs, and different things like that. Whereas robo-investing, that's where it has an algorithm, and it basically chooses the stocks and ETFs for you so that you can be very hands-off. And as for the savings account, it's kind of in between. You can do what you want. You can either go for like a mutual fund, which is where they do it for you for a certain fee, or you can choose your own stocks. So I personally like having a brokerage account where I can kind of pick and choose what do I want to invest in. But that is all up to you guys, and let's get into the next one. Alright, so far we've figured out what in the heck the stock market actually is, why we should invest in it, and which account we should be opening up. The next and final part is figuring out what strategy we want to do, what strategy we want to go into. There's 3 different types of strategies. There's day trading, which is awful. Don't do it. I tried it, lost a lot of money. Don't do it. The next one is swing trading. That's a little bit better. Not the one I prefer. The last one and final one is hold. Hold, 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 hold. Buy, hold, buy, hold, buy, hold. And that is what Warren Buffett has done, and he has created an abundance of money. We obviously won't be exactly like Warren Buffett, but I'm going to try to be close, I guess. Looking at the buy and hold method a little bit further, there are 2 different strategies out there. There's the growth strategy, or there's the dividend strategy. Or in 2020, you like to call it the hybrid strategy, whereas you do both. But for the first one, for the growth, it's basically looking at the potential a stock has to grow as a percentage by the end of the year. So you're just looking at a possibility of happening. Whereas if you looked at dividends, it's a fixed rate or a fixed amount of percent that the company gives you for owning that stock. So think of it like a fixed amount of money versus a variable amount. The variable amount might go up or down, you don't know, but the fixed, you know you're for sure getting that amount of money. You want to really research the companies that you're putting your money into if you're investing in single stocks, right? So a Google, an Amazon, a Facebook are really good starting places because you know what they do, and you know that they're going to keep getting higher and higher as time goes on. You're not going to be freaking out if all of a sudden you lose 10% of your money, because you know eventually that it'll come back up, and you have hope that it will. Now, if you want to really start getting into it, I'm going to be making a video how exactly you can analyze each and every stock, more in particularly. But as a starting point, investing in Amazon, Google, Microsoft, Johnson & Johnson is a good place to start. Another benefit of buying and holding is for taxes. So if you buy and hold the stock for over a year, then you only have to pay about 15% in taxes, whereas if you bought and sold before a year, then you would have to pay your income tax rate that you pay for your job. And that tends to be a lot higher than 15%. So right here is a perfect example of when I should have bought and hold. Instead, I was jicky-jacking around with swing trading, day trading, all that excellent, horrible stuff. So An example is I bought Nvidia for about $160 and I sold it back in 2017 for like 170. I was stoked. I made 20 bucks a share. However, what is it now? 500 and something dollars. So I could have made a lot more money. However, I chickened out and I sold. Next one, put in the amount of money that you feel comfortable losing. If you don't do this, you're gonna get scared and your emotions are gonna be going crazy. You're gonna be freaking out if it goes down 10%. You wanna have the gut, the feeling of where if it goes down 10%, you go, hey, I'm fine, and it will recover and eventually it'll be all good. So you don't wanna have to like, oh, should I get groceries or should I stay in the stock market? You don't wanna have to be doing that. My last and final recommendation would be take more risks when you're younger. You have more time for the stock market to correct itself if it goes way down. And then the more wealth that you create when you're younger, the more you will have to invest in when you're older. So my recommendation, take risks when you're young, and then you will have a lot more money when you are older. So if you like this video, give it a thumbs up, subscribe, and there'll be another video coming out soon, probably next week, next Thursday, so stay tuned, and leave a comment down below how much money you guys have invested in the stock market. Actually, that's kind of weird. I guess don't do that. I don't know. Comment whatever you want. All right, peace.